Welcome to the company presentation of Rohstoff-TV Gold at Commodity TV. Rohstoff-TV Gold is the next Nevada gold producer with 75,000 ounces of annual gold production over a plus 8-year mine life. The company wants to expand this to a plus 100,000 ounces gold per annum. They also have additional oxide ore expansion and development of adjacent deposits, and the project works in a $1,000 per ounce gold environment. Rohstoff-TV has strong near-term cash flow with the initial production expected by January 2017. Important to know is that the company is fully financed and is building a leach pad, not a mine. The team are experts for low-grade operations and it has a strong management team. The Florida Canyon operators have a demonstrated track record of execution with plus 20 years of operating history. The district-scale land package in Nevada hosts a measured and indicated mineral resource in excess of 3 million ounces of gold equivalent and an inferred mineral resource of 1.4 million ounces gold equivalent. Florida Canyon itself has a significant oxide and sulfide potential. In addition comes significant synergies and upside potential. Let's start with the Florida Canyon mine. It has a long and profitable production history when it was bought by Rohstoff-TV in 2016. The total gold output so far was 2.3 million ounces gold with 68% recoveries. Well, what was the deal? Admiral Capital, a private Japanese lending fund, became owner of Florida Canyon due to default by prior Japanese owners. What has Rohstoff-TV paid for Florida Canyon? Well, first there was an upfront consideration of $15 million in cash and 20 million Rohstoff-TV gold common shares. On commencement of production, there is a deferred consideration with $5 million provided as cash or a combination of common shares and a subordinate loan of Rohstoff-TV's option, which means $2.5 million in common shares priced at a 20-day weighted average price on commencement of commercial production, plus a $2.5 million subordinate loan maturing 2021 and bearing interest of 4% in year 1 and 9% thereafter, and 15 million warrants to purchase shares at an exercise price of 50 US cents per share. How is the financing structured? Well, around 49 million Canadian dollars, which is approximately 37 US million dollars, was done through an equity financing completed on 16th June 2016. In addition to Rohstoff-TV a $27 million US debt facility with Macquarie Group to cover the initial capital expenditures like pad constructions, equipment maintenance, crusher upgrade, working capital, bonding and other operational financial requirements. They also did a hedging facility for 150,000 ounces gold over 5 years to secure the whole deal but not killing the upside of a possible higher gold price. Highlights for the Florida Canyon PEA are a 8.5-year mine life, an annual production of 75,000 ounces with a life of mine production of 612,000 ounces gold with an IRR of 34% and an NPV at 5% discount after tax of $56 million. The cash costs are at $759 per ounce and the AISC at low $887 per ounce gold. In addition, are all aspects of the mine operation fully permitted. The pad, plant, offices and all equipment is on site. The efficient leach kinetics are fantastic, with the majority of gold leached recoverable within 30 to 45 days. Rohstoff-TV mines the same rocks and placing them on a new leach pad. The mine is located in an infrastructure and transportation corridor only 70 kilometers south of Winnemucca in Nevada and immediately adjacent to Interstate 80 and adjacent to rail and power. All critical items like building the pad, moving the crusher are on time and budget, and refurbishing the fleet is ahead time and below budget. The restart of the mining was on 1st November with the first blast on the Tesperate Hill Pit 5620 bench. The full commercial production is by end of Q1 2017 expected. What might or will be a future scenario for Rohstoff-TV? Well, the company can bring their Lincoln Hill project now 2 into production and later their Wilco project. Combined, all projects have today a M&I resource of 3.21 million ounces gold equivalent. Lincoln Hill has also fantastic PEA numbers with total cash costs at $759 per ounce gold and a low capex of only $26 million for approximately 45,000 ounces gold production per annum. In addition, they can lift fantastic synergies through the combination of Florida Canyon and Lincoln Hill, as Florida Canyon has a capacity of 180,000 ounces per annum in their ADR plant and refinery. RipeEdge can be very fast, a plus 120,000 ounces gold producer with low costs and high margins. Check it out. Merry Christmas and bye-bye from Unique.